Hey everyone, welcome back to Corporate Decoder. Today MRK just filed its latest quarterly report, and I am seeing some massive charges that are really shaking up their profits. Quick note, this is not financial advice, just my take on public filings for educational purposes. Merck is making some huge bets on new drugs, but these bets are costing them billions right now. Merck & Company Incorporated, or MRK as you know it, has just released their quarterly report, and it is a wild ride. Think of this as a financial checkup for the company covering the first 6 months of 2026. Looking at the big picture, their sales are up. For the first 6 months of 2026, sales hit about $32.9 billion, which is a nice jump from $31.3 billion in the same period last year. That sounds good, right? But hold on, because when you look at what it costs them to make and sell these products, things get a lot more interesting. Their research and development costs jumped from $7.7 billion for the first 6 months of 2025 to a staggering $22.3 billion in the same period of 2026. That is a massive increase, more than doubling their spending. Why such a huge jump? Well, they have been busy buying other companies. In May of 2026, they acquired Terns Pharmaceuticals for $6.8 billion. This acquisition alone added $5.7 billion to their research and development expenses because it was mostly for the potential of new drugs that were still in the early stages of development. It is like buying a promising idea before it is even a product. And that is not all. In January 2026, they bought Cidara Therapeutics for $9.2 billion. This one added a whopping $9 billion to their research and development costs for the same reason, buying potential new drugs. These are huge bets on the future. Now, even with these massive investments, their sales are still growing. Worldwide sales reached $16.6 billion in the second quarter of 2026, up 5% from last year. For the first 6 months, sales were up 5% as well, reaching $32.9 billion. A big reason for this sales growth is their cancer drug, Keytruda, and its newer form, Keytruda. Qlex sales for these drugs alone were over $8.3 billion in the second quarter, and $16.4 billion for the first 6 months of 2026. That is a huge chunk of their business, and it is still growing. Another star performer is Winrevair, a drug for a type of lung disease. Its sales shot up by 75% in the second quarter to $588 million. This drug was acquired as part of the Verona Pharma deal, and it is clearly doing very well. On the flip side, sales of Cidara, their COVID-19 antiviral, have plummeted. Sales were only $5 million in the second quarter, down a massive 95%. This is because COVID-19 cases are lower, and importantly, their emergency use authorization in the US is ending next year. So expect these sales to keep dropping. Their diabetes drugs, Januvia and Janumet, are also seeing significant declines. Sales dropped 31% in the second quarter. This is because these drugs have lost their market exclusivity in the US this year, meaning generic versions can now be sold, which always cuts into sales. Now let's look at their financial health, their balance sheet. As of the 30th of June 2026, Merck had about $6.8 billion in cash and cash equivalents. That sounds like a lot, but remember they just spent billions on those acquisitions. Their long-term debt has increased significantly, jumping from $46.7 billion at the end of 2025 to over $51 billion by mid-2026. This is a direct result of the recent acquisitions and likely the money they borrowed to fund them. While not alarming for a company of this size, it is something to keep an eye on. Looking at how cash is moving, their operating activities provided over $9.2 billion in the first 6 months of 2026, which is a good sign that their core business is generating cash. However, their investing activities used up over $15.8 billion, mainly due to those big acquisitions we talked about. Merck is also in the middle of some major restructuring programs. They approved a 2025 restructuring program aiming to cut costs and streamline operations, expecting to spend about $3 billion on it. They also have a 2024 restructuring program with an even bigger estimated cost of $4 billion. These programs involve job cuts, closing facilities, and other cost-saving measures. In terms of legal matters, Merck is still dealing with some old product liability lawsuits related to Dr. Scholl's foot powder. While they had a recent win in one trial, there are still about 800 cases pending. Their HPV vaccines, Gardasil and Gardasil 9, were involved in a major product liability lawsuit. While they reached a proposed agreement to resolve most of the pending claims, the details of the total payment were described as considerably less than Merck's anticipated costs of defense and not material to Merck. This is good news for them as it avoids a potentially huge financial hit. There is also ongoing patent litigation surrounding Keytruda, their blockbuster cancer drug. They are involved in disputes with Johns Hopkins University over patents related to Keytruda's use. While this is complex, it seems Merck is currently on strong ground with patent office rulings in their favor. The company's tax situation is a bit complex. For the first 6 months of 2026, they reported a pre-tax loss of $4.2 billion, but still had a tax provision of $1.4 billion. This resulted in a negative effective tax rate, mainly due to those massive acquisition charges that did not offer any tax benefits. Merck also provides a non-GAAP view of its finances, which basically means they remove certain items to show what they consider their core operating performance. For the first 6 months of 2026, their non-GAAP income before taxes was a loss of $1.65 billion, showing that even after removing those big charges, their core operations are still facing challenges. Looking at how different parts of the business are doing, the pharmaceutical segment is the giant, bringing in over $23 billion in profit for the first half of 2026. The animal health segment is much smaller, with profits of about $1.3 billion for the same period. However, when you look at non-segment activity, it shows a massive loss of nearly $29 billion for the first 6 months of 2026. This is where those big acquisition charges and other unallocated corporate costs are hitting the company. One of the biggest risks Merck is facing is pricing pressure, especially from government actions. The Inflation Reduction Act in the US is allowing the government to negotiate drug prices for some of their key medications, including Januvia and Janumet. They even expect Keytruda to be selected for price setting in 2027. This means their future profits from these drugs could be significantly lower. Despite the challenges, Merck is still pushing forward with innovation. They have had several regulatory approvals for new indications and new drug forms in 2026. For example, Keytruda received approvals for new cancer treatments in China, the US, and Europe. Financially, Merck's total debt to total liabilities and equity ratio is at 41.5%, up from 36% at the end of 2025. This increase reflects their borrowing for acquisitions. So, what is my take on all of this? Merck is making huge multi-billion-dollar bets on the future with these acquisitions, especially in oncology and other areas with their promising drug pipeline. They are clearly investing heavily to drive future growth, and their flagship drug Keytruda continues to perform exceptionally well. However, these bets are coming at a massive immediate cost, leading to significant losses in the short term due to acquisition charges and restructuring. The biggest risk I see is whether these massive investments in R&D and acquisitions will pay off in the long run, especially with increasing pricing pressures from governments and growing competition. They are making a big play for the future. But the present is looking quite expensive. The research tools I use to track these filings are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description.